the system died and they need to reset the entire global financial system. And the only way that they have ever done it, ever, is against gold. And then silver, also a monetary metal. But gold is what they reset it against. That's why it's going to go up massively in terms of all of those currencies.
Hey friends, thanks for tuning in. Before we begin this gripping interview, I want to let you know this video is brought to you in part by our friends at virtualshield.com. If you're sick and tired of being spied on by Big Brother, get a real VPN that will actually protect your privacy. Visit our friends at virtualshield.com. Virtual Shield VPN is the easiest to use VPN in the world and one of the fastest, and their no-log policy protects users from any data breaches, and they would never ever sell your data like Facebook would. And this month, Virtual Shield is offering 70% off VPN plans and discounts on all premium add-ons, including IdentiSafe, which allows you the ability to block off computer, microphone, and camera access from any unwanted spies or hackers. You have the right to remain private. So check out Virtual Shield VPN. I'll leave the link below this video. Hey friends, thanks so much for tuning in. It's great to have you back, and it's great to have back on the line Lynette Zang. She's the Chief Market Analyst over at ITM Trading. We've got so much to talk about. Guys, it's never been more clear to me, and of course you all know this, that the biggest enemy of our freedom is probably the Federal Reserve. I don't know that I'm overstating it. In fact, President Trump has recently called the Fed raising rates his biggest threat. And you'll notice, guys, that as soon as President Trump criticized the Fed, the markets crashed. Lynette Zang is here to help us break it down. Lynette, welcome back.
It's always good to be here, Sean. I always enjoy our interviews.
Yeah, well, thanks for coming back on. And I know you're recharged. You just got back from a little mini vacation, and it's good to have you back. And I wanted to ask you your thoughts about the Federal Reserve raising rates at a furious pace. And the new FOMC notes suggest they're going to keep doing it, and they don't care who's in the White House. No, wait a minute. They did care, because when Obama was in there, they kept the rates artificially low for an incredibly long period of time. And now that there's somebody in the White House they don't like, they're going to raise rates and break the back of this economy.
Well, another part of that is that, and if you listen to them, they tell you this all the time, that they're trying to quote unquote normalize in an abnormal market so that they can drop the rates during the next crisis, because they know that that's coming. And also keep in mind that every time they raise the rates, they're raising the rates that they pay the banks on the excess reserves that they hold there. But you depositors, are you getting any more money? So it's really about benefiting the banks again, always.
Yeah, that's right. It is always about the banks. And, you know, I do have a clip I want to play for you here in a second, and it's from a really great interview done by Jason Burek over at Wall Street for Main Street. He interviewed Trader Vic back on September 19th about the 30-year yields. But before I play that for you, I just want your thoughts on the 30-year, because the point he makes in this soundbite, Lynette, is that since 2015, there's been 7 rate increases, and yet the 30-year is only at 3.1. We'll break that down in a second, but your thoughts on this inverted yield curve?
An inverted yield curve where your shorter term rates are higher than your longer term rates. And so, yeah, people have probably been hearing about the flattening yield curve, but according to studies done by the central banks, 100% of the time, when the shorter rates go higher than the longer rates, that's the inverted yield curve, a recession follows. Now, you know, in this case, a recession is not going to be light and a little thing. This is going to be the next crisis. And so, absolutely, they're pushing us into it because, again, you know, which I talked about all the time, the system that we knew is gone. It died in 2008. Has enough risk been transferred? You know, maybe so. But when you're talking about whether it's the bond market, but particularly all the roiling we've seen in the stock market, you know, for what, about a year now, I've been talking about the escalation in pattern shifts. And I never really hear, or I rarely hear anybody ever talk about that. But that's an indicator of where we are in the trend and the fact that it's breaking down. So even going to the interest rates, And the 10-year Treasury bond is the bellwether, the global bellwether bond. It's the foundation of the entire global financial system. Remember when they kept telling us that rising interest rates didn't matter? You're right, they were suppressing the 30-year, but they were raising the shorter term, and they said, it doesn't matter anymore. This time is different. It doesn't matter anymore. Well, guess what? In January, right as the markets began to break down, and you might recall that wasn't that long ago, there was a shift, a decoupling, and where interest rates and stock markets were almost moving in tandem, in January that separated, and you have a massive divergence between the 10-year bond rate and what's happening in the stock market, because yields matter. And you're right, the Fed is absolutely, I don't know if I can say this, but hell-bent on their program of raising rates, primarily so they can lower them.
Well, it's just clear that the Fed is a politically active private organization. People don't understand that. I mean, most people, our listeners do, but it is not a part of the U.S. government, and it is not beholden to anything any president wants, or the Congress, or the Senate. They're an independent body owned by a private group of international banks, and they're going to, if allowed, take this country down by raising rates and punishing President Trump.
It's not if they are allowed. Who is going to stop this? And it's not just President Trump. It's so much broader than that. Because in 71, when Nixon disallowed other governments converting their dollars into gold, he actually handed over full power to the central banks over the money supply. And wasn't it Rothschild that said, I care not who makes the laws? You know, if I have a printing press, I can control everything. Those weren't his exact words, but you get the gist of that quote. We all know that. And what do bankers know? They know debt and leverage, and what do bankers get to do? They get to collect interest on that debt and on that leverage. And in that way, they've transferred the wealth of the public. And this is something that historically they've done over and over and over again, which is why prior to the Federal Reserve, and actually it was 1927, all central banks had a limited charter. They were only alive for 15 to 20 years. And then they had to re-up the charter. It was in 1927 when they gave the Federal Reserve a perpetual charter. That's the first time in history. And look at where we are from that.
Well, and as everybody knows, the borrower is slave to the lender. And that's exactly what Rothschild meant when he said that about he who controls the currency controls the Bank of England, and I control the currency. I care not what politicians do as long as I control the currency. And when I said if they're allowed to, what I was suggesting is Trump is going to need to nationalize the Federal Reserve, right? And that ultimately would be the only thing that can save us from the maniacal and tyrannical nature of these banks. I want to get back to the 30-year and play you this soundbite from Trader Vic to get your thoughts on this, because it's clearly being manipulated, I think, for the benefit of the big commercial banks. So listen to this.
Let me put this into just one little piece of historic context. When the Fed started to raise rates in this cycle, which goes back to December the 16th of 2015, they went from 0 to 1/4. On the 16th, the close, the yield on the 30-year was 3%. Now, after 7 increases, including the first one, it's 3.1. There's something wrong. You see, nothing acts like that. There is some change somewhere.
He says something is wrong. Something is definitely wrong. Just look at the stock market. Stock markets don't behave like this and go up in perpetuity. And, something is wrong with the 30-year. It's being manipulated. I mean, I guess I'm glad it's not at 4 or 5%, but I mean, how is it still stuck at 3.1?
It's really easy. First of all, they had the 30-year, and then there was a block of time when it didn't exist again, and then they ended up bringing it back within this cycle. I don't know the exact dates of that, but that's easy enough to look up. But if you stop and think about what interest rates are supposed to let you know about, inform you of. It's the value of money. So with the longer rates being flat or, and not moving like that, what's that really telling you? That's telling you that the value of money going out 30 years is not as valuable as the money in your pocket today. Now, when that yield inverts, that's why it always foretells a recession, because what that's really telling you is that the money is about to lose a lot of value. So I don't think that, I think people have a level of challenge around understanding value and understanding signals. That's what the 30 year is telling you, that the value of the dollar is going to be a whole lot less in 30 years, presuming it still even exists. I mean, it can exist in another form with the same name, but they're telling you there's no value in the dollar in 30 years, essentially.
Well, let's turn our attention to the stock markets. We had the recent meltdowns. We see the emerging markets in meltdown mode. You and I have talked in the past about liquidity and what happens when everything crashes. Let's talk about the lack of liquidity when margin debt is evidently at an all-time high, even when measured as a percentage of GDP. Can you imagine how the panic when margin debt is that high and people start to see their accounts plummet?
Well, it isn't just that they see their accounts plummet, it's that they also then get margin calls. And depending upon the level of leverage, and remember, I'm not a stockbroker anymore, so I could be wrong on this percentage, but I believe that they can leverage it 10% in the account, and this is like the normal person, 10% in the account, so that means that they've borrowed 90% of the money to buy those stocks. So as the stock market falls, and it reaches certain levels, then you get a call from the broker, you got to pony up more money. If you can't pony that up, then what they're going to do is sell off your position to meet that margin call. And because, when you're talking about liquidity, and it's interesting because that's what I'm going to be talking about, right now. What's really been happening in these markets is that the layers of liquidity, the broad base of buyer is really no longer in these markets. And I believe the markets went down about 1,200 points in 2 days last week, and the volatility has spiked. But that's really because, think about this. You talked about the margin, so that's one. There are limitations to how much one can borrow, and it is usually based upon your income and your ability to repay that. So with margin levels that high, that creates some limitations on how much that can support the market. Then, of course, you have the Federal Reserve that is running off its balance sheet. Slowly, I'll bet, but they're running off the balance sheet and they're raising rates. That is contrary to what the rest of the central bankers have been doing, but that eliminates another level of liquidity and support for the stock market, especially with interest rates going higher than the dividend payout on the stock market. It makes the bond market more attractive. So that eliminates that layer. The individuals, I don't really talk to anybody that doesn't have this gnawing feeling that something is wrong, that there's just something going on. And so even though they are hesitant to pull the money out of the stock market, out of their 401ks, out of their variable annuities, out of their IRAs and retirement plans, because they see the stock market, going up, they are not real keen on rushing into these markets, much as Wall Street's been trying to bait us into it. And that really means that the last player to support these markets are all those stock buybacks. And while that's been happening at the highest levels, again, the highest levels ever, the reality is right around the issuance of their earnings, which is where we just entered earnings season now, there's a blackout on buying stocks. So you want to know, and they could hide it before when there were more players in the market, but now that it's down just to corporate buybacks, essentially supporting the markets, and all the high frequency trading and all the algorithms and all the ETFs, which means that all of the trading is done like in the last half hour of trading. You want to know what it looks like with lack of liquidity? That's what flash crashes are about, because there's no buyer on the other side. And we only have, at this juncture anyway, one support. So markets are roiling, I think, because of the stock buyback period that's been going on right now. Of course, they can resume the buybacks, and I'm sure they will with a vengeance, 2 days after they report. So that's why you can get a bounce here and a bounce there as the companies report past that metric, and then can then go back in and buy. But I think this is really a gift, because it's letting you know there are no buyers in the market. There's only stock buybacks. Now, I'm not saying that won't change. I'm going to do a piece on, as the next crisis unfolds, what are some likely moves that the central banks are going to take. However, all that manipulation and garbage does is reduce the value, keeps the numbers going up or where they are, but it reduces the value of everything. It's just done so, perception management, it's done invisibly and people don't realize it.
Right.
Does that make sense to you?
Yeah, it did. And I'm stuck on how overvalued the stock market is. I love to give shout outs to people. I mentioned Jason Burek earlier. I'll mention Mike Maloney now. Maloney put out a video on October 16th in which he talked about the margin debt, but he also talked about the Buffett indicator. And he shows a chart here that shows how overvalued the stock market is. It's an absolute sell. It's actually much, much higher now than it was. It's much, much more overvalued now than it was in the 2008 crisis. And it's getting so bad that it's fast approaching. It's getting very near the top of what we saw in the 99-2000 meltdown with internet stocks and the internet bubble. That's where we are in danger territory. And I just don't think people understand how badly they can get hurt. People have short memories, and people are going to get hurt again. And I think the thing that needs to be said is that what you're supposed to do is be contrarian if you want to be smart with your money. And you got to look at the most hated sectors. And I don't think there's a more hated sector right now than silver. Gold as well, but silver specifically at 14 and a half, $15 an ounce. I mean, it's absolute lunacy. I mean, that's where people ought to be going.
Exactly. And actually, when you look at the graphs, even starting from the beginning of this year on silver and gold, well, do they really want you running to physical? Heck no, they do not want you in physical metals. They want you in their products where they make money, where they can leverage your equity. And when this next crash happens, whatever wealth you hold in there, it's not coming out because there are no buyers. So you're absolutely right. You want to be a contrarian. And then also look at what the smartest guys in the room are doing for themselves. JP Morgan sitting on the largest silver hoard ever in history, far more than Buffett. I think that was 97, and the Hunt brothers in the 80s. Well, why would they be doing that? And central banks have been accumulating gold voraciously since the crisis. But at the same time, even looking at the supply and demand, right, which demand is always for both gold and silver because it's used across the total economy. Everything else has been reflated. Do we remember the talk about the reflation trade? Except for gold and silver, which has been hammered because they don't want you to go there. They're going there, but they don't want you to go there. Do what I say and not what I do. Thank you, Daddy.
Yeah, that's right. And let's look at what they are doing. You and I have talked about this before. This is from cbsnews.com, dated September 26th, 2018. Guys, that was just 3 weeks ago. Executives are selling off their company's stock at a record pace. Here's the article. Corporate insiders are dumping stock in their companies at a rate not seen in 10 years. With September not yet over, stock sales by company execs reached $5.7 billion, according to data from Trim Tabs, the highest September in a decade. August's $10.3 billion in insider sales also reached a 10-year record. These guys are selling, right? They want you to buy. They want you to stay in. They want you holding the bag when the whole house of cards comes down. And meanwhile, they make off like bandits.
Exactly. They even did an SEC report talking exactly about that. And people think, well, how can these corporate insiders be selling and the stock market goes up? That's what the flipping stock buybacks are all about. It hides that. It hides that. And not only that, but as we talked about a few minutes ago, with the passive investing, which are all computer-driven algorithms, but with the ETFs resetting that last half hour of the day, that's where all the liquidity is. So if there's going to be some funny business with a corporate insider or what have you selling out a large position, that's where they hide it. That's where they hide it, between that and the corporate buybacks, and you can't see it.
Right.
It's disgusting. It's disgusting.
Well, as we try to read the tea leaves, which has never been harder because of the massive manipulation, because of the plunge protection team and everything else they do to throw at this market to prop it up and make the economy look good. By the way, the economy is fundamentally doing much better because President Trump is in the White House versus Hillary Clinton, in my opinion. I think we're seeing something that the banks, the big international bankers and the Rothschilds don't want. They don't want a powerful United States, a sovereign United States. They would much rather bankrupt us and take the people back into extreme poverty, because then they can control us. And the best way to do that is to crash everything and then have the dollar hyperinflate. So here's my question. As we try to read these impossible tea leaves, I recall doing an interview many years ago with Pastor Lindsey Williams. And Lindsey Williams said exactly what we're seeing now. He said they're going to take the stock markets to unimaginable heights. And when you think they can't go any higher, they'll go higher still. He said, what you need to watch for is the euro crashing. The euro will go first, and then you'll have a couple of weeks to get out of everything because the dollar will be next. What are you seeing with the euro, and do you think that that prediction is somewhat sensical, the prediction he made about the euro going first?
It could go first, but okay, this is the only reason why you hear my hesitancy. Donald Trump is a populist president. Well, the populism has been growing all around the world. So that is a huge threat to the central banks. And absolutely, they would rather, as you said, crash the system so that everything starts out new and you're all distracted. But we are definitely in melt-up phase. And I got to tell you, Sean, it's really not so hard to read the tea leaves, because all you really have to do is watch the pattern shifts, because the pattern shifts indicate the loss of ultimate control. So while there are indeed all of these manipulations, when I was looking at all of the pattern shifts, I was just looking at that earlier today, just what's even happened since the beginning of the year, but because there was another shift, or an escalation is a better word, in the speed of the pattern shifts that I'm seeing. And it looks eerily like it did, and I just got goosebumps, in between July 2007, when the dollar broke a key level, until 2008, September, October 2008, when the public was aware of it. We saw the same kind of escalation in the speed of the pattern shifts, the decoupling that we're seeing right now. And they know it. They absolutely know it.
That's scary.
So that frankly, that is making me really nervous, because I was just looking at this morning. And I'm telling you, the tea leaves may be murky if you're looking on the surface. What's murky is the timing, but not what is going to happen. Because at the end of the day, the laws of economy work for everybody. These men and women cannot overrule Mother Nature and economic law. There's only so much debt that anybody can take on.
Yeah.
There's governments take on debt on behalf of the population, and we have to repay it via tax dollars. How much can you tax somebody? Especially when you're pushing down their income. So now, what, Amazon, woohoo, giving $15 an hour? I mean, is that really even a living wage?
The debtor is the slave to the creditor. And here's what makes me so damn angry about all this, Lynette. The most powerful and dangerous weapon on earth is the control of the printing presses and the national currencies. And who controls them? The Rothschild central banks all over the planet. And
Yep.
so when we see this rise of populism, when we see a president that wants to put America first, when we see good things happening because an honest man is in the White House, in my opinion, certainly 10,000 more times honest than Hillary Clinton, in my opinion, when we see those things happening and we see consumer confidence on the rise, we see unemployment near historical lows, when we see these good things happening, the bankers get very angry, don't they? And they start to raise rates. The Fed raising rates 7 times. I guess it's a good segue into the question about the 1988 Economist cover, which you and I have talked about many times before.
Right.
The Rothschild's Economist magazine in 1988 predicted a collapse in 2018 because the medallion around the phoenix's neck said 2018, and the cover of that magazine said, "Get ready for a world currency." Now, we've underestimated them because it didn't appear like anything was really going to happen in 2018, but you've just outlined that things look ripe for a plucking.
Very right. I mean, people can ignore the pattern shifts. Most people don't know how to see them, but it's easy to see them. Put them on a graph and play with that graph, and you will see them. They become crystal clear, and they tell you that this system is breaking down. And the more frequently that those pattern shifts occur, it tells you that that breakdown is building up speed. Now, I can't tell you right at this moment that what we're seeing in these stock markets is that's it, because there's still, I mean, once the blackout period on stock buybacks is over, you will see the buybacks continue massively because those insiders always get out near a top. What do the smartest people on any given topic, what are they doing for themselves? They are getting out. But most people just look at the surface. Well, that's what they want you to look at. You need to look a little deeper and see these pattern shifts and see what they're doing for themselves. And then if you can emulate them, emulate them. We can all buy physical gold and silver because it is so, as you pointed out, ridiculously cheap. That's what's called buying low and then selling high. And it's not because Wall Street says that it's going to go up. I mean, whoop-de-doo, the market's tanked and spot gold went up a little bit. That's not it. That's not what it's about. It is about the fact that the system died and they need to reset the entire global financial system. And the only way that they have ever done it, ever, and there's lots and lots of examples of it, even current, is against gold. And then silver also as also a monetary metal. But gold is what they reset it against. That's why it's going to go up massively in terms of all of those currencies. But that's really an indication of the currencies and all of the wealth that's held in the fiat system going away, becoming worthless.
Yeah, and that's what everybody needs to worry about. If the fiat in your pocket becomes worthless, you will be a serf. Now, look, as we talk about all of the different sectors out there that are overvalued, we might include real estate in that basket. We might include stocks in that basket. We might include bonds in that basket. And again, it gets us back to silver in physical form and gold in physical form. And I guess mining shares, if you really want to take a flyer and a gamble. But I know it's been the worst of all sectors for so long. But here's the thing. What has Venezuela taught us about owning physical gold and silver? If you have some and you live in Venezuela and you watch your currency implode due to hyperinflation, what has the ownership of precious metals in physical form taught us just watching Venezuela?
what it's taught us is that those that hold it can get through these periods of time and also grow their wealth base, because the other assets in Venezuela, the real assets, the income producing assets, are dropping out the bottom. They're just falling in terms of the fiat. So, Venezuela should be teaching us all a lot.
Well, I think it's taught those paying attention a lot. But the bottom line, as you know, Lynette, our listeners are very informed, but most of our friends, neighbors, and colleagues, they're not very informed. I don't think that they understand the value of physical silver and gold, because if they did, silver wouldn't be sitting at 14 or 15. Not enough people are buying it.
I'm buying it. Actually, that's not really true, because the silver sales, I think this was in, I just saw a report on it, where silver well, first of all, they ran out of blanks in silver, and once they got the blanks in, sales spiked. So for many years now, when we track physical demand versus the spot price, it's completely illogical, because it costs almost nothing, $1.50 if you're a big bank and $1.10 if you're a central bank, to control 500 ounces of physical silver and 100 ounces of physical gold.
You're right. It's been viciously manipulated, and that explains this low price. I just want people to understand. My goal here is to try to wake people up and help them understand that there is a way to find harbor from a storm, an economic storm, and one that the Rothschilds themselves tell us is coming in 2018. I hope it doesn't. I pray that it doesn't. I think our way of life, we're among the most blessed people on earth, despite the shenanigans and actually pure evil of the Federal Reserve and what it's done to this country. We are still among the most blessed people in the world, and I pray to God we don't turn into the next Venezuela.
Well, we can pray all we want, but that is absolutely in the cards, and it's also necessary. What we have, and I'll tell you this, I've studied currencies since 1987, and I see patterns, and that's what the strategy, it isn't just that you can come to ITM trading and buy gold and silver. Of course you can, only physical, and that's all that we deal with. However, what really makes us different, as you were just talking about, that there is a place, is these patterns. They're repeatable patterns. So that's not something that I created. It's just something that I recognized. And I developed a strategy for myself. And then I put it into spreadsheets and hard copy, etc., so that everybody that comes to ITM trading and the ITM trading family, because this isn't just, anybody can sell you gold and silver, but you need to understand the kind of gold and silver that's going to support your goals. You need to have the ability to know when, where, and how do you utilize these different types of gold and silver? And when do you take advantage of the opportunities, so that on the whole other side of this mess, which is where I have hope, that we have choice. If enough people understand what's happening, we could have a more fair system on the other side of this reset. We got to have the reset. There's just no way around that. The system's just too heavy in debt. How do you get rid of the debt? You declare bankruptcy. Well, that's what hyperinflation is. So, here we want people to understand. We believe in education. We want people to understand how to recognize these things. That's the whole point. That's my goal on our YouTube channel, is I'm trying to give people the tools to recognize these patterns, and even to recognize what are the guys at the top of this food chain that designed the system and support the system and manipulate the system and profit by the system. What are they doing for themselves? Because then maybe you don't need to know the rest of it, but if you can learn where to look and find, it's not that hard. You can find what are they doing for themselves, and you do the same thing. Gosh, I just think we've got a much better chance of coming out the other side in a way better position, because wealth doesn't disappear. It transfers location. And that's what they know happens. That's why some of the crises, well, maybe they are a shock. A lot of the crisis in my research, it's planned. It's planned. Because then the public is distracted. I mean, think about what happened in 2008 and how much wealth transferred from the public to those that were chosen, that were too big to fail. So I think, you have a great mission, and we are, all of us together, a community and a resource. And yeah, there are opportunities that are in here if you simply position into physical gold and silver. And even if you're going to stay in the markets, and I'm not in the markets, but even if you're going to stay in those markets, enough to properly diversify your portfolio so that if I'm right, because obviously I can't guarantee that, but if I'm right, and if the wealth that is held in those fiat markets gets frozen in those fiat markets and you lose all access, well, you got the gold and the silver over here to recoup that loss.
Right.
I mean, that's proper diversification. They want you to think that that you have no choice. Everything's in Wall Street and it's all paper and it's all fiat. And so you're either going to buy stocks or you're going to buy bonds or you're going to buy mutual funds or those kinds of things. We have choices, and we need to start really exercising our choices.
Yep. Precious metals are an insurance policy, and increasingly they're looking like an insurance policy that are going to pay off in a very big way. Hey, before I let you go, that fifth book down in your pile behind you there, does that say Fed Up? Is that about the Federal Reserve?
It is.
Yeah.
Yeah, well, that was actually this book. Here, I'll pull it. Sorry.
Well, I just brought it up because I'm fed up of the Federal Reserve. And I think that what needs to happen, regardless of a crash, no crash, what needs to happen is that the Federal Reserve needs to be nationalized, and we need to get this noose from around our necks off us once and for all. We got to take back these central banks by and for the people, not by and for the banksters.
Yes.
Who's the author of that book?
This is Danielle DiMartino Booth. And she was part of the Dallas Fed for a number of years. So she's an insider talking about all of the negative things on the federal. She's fed up, and she was part of the system.
Yeah. Well, I just think it's very interesting. I don't remember the last president that criticized the Fed the way Trump did just a week ago or so, less than a week ago. And he was duly spanked for it because immediately we saw the markets begin to crash.
Right.
Coincidence? I don't think so.
I don't think so. But, when you also talk about nationalizing the central banks, when that happens in here, I don't really think, frankly, that's going to be a good thing. Because then they will, they're already monetizing the debt by buying the treasuries, by buying the mortgage-backed securities. And this transition to really doing that really began during the crisis. So there were some shifts in the way the Federal Reserve was structured and monitored and what have you. But that's just what Turkey did, and that's also what Venezuela did. So the central bank will be nationalized when they need to do the hyperinflation. So, and then, after that, do we need a central bank anymore? No, that's my hope, is that through this reset, they lose their power. They really lose their power.
Right. And
we go back to a fair monetary system, because as long as they're around, we're not going to have a fair monetary system. It's a bank, and who do banks care about? Banks. Simple.
Right. All right. Well, Lynette, thanks so much for your time. We appreciate it. Why don't you shout out the website for people?
Absolutely. itmtrading.com. On YouTube, you go into ITM Trading. And of course, we've got lots of live, wonderful precious metals consultants, and you can reach us at 888-696-4653.
All right. Very good. Lynette, thanks again for your time. We really appreciate it. And we'll be in touch again soon.
Absolutely, Sean. Always a pleasure. Take
All
care.
right. Take care. And guys, thank you so much for tuning in. We very much appreciate it. I wanted to let y'all know that it occurred to me the other day when I was having an internet issue that I couldn't get anything on my feeds on my phone. And so I went to thephaser.com, where I hand select very interesting, thought-provoking videos for people on a daily basis. And so if you're ever hard out for good content and you just want a variety of good content, go to thephaser.com and click play on any of the videos. I provide many on a daily basis for you. Also, check us out at thelibertymill.com. And for real news 24/7, visit us at SGTreport.com, the antidote to corporate propaganda. Thank you, one and all. God bless. Bye-bye.
You're going to see arrests, and then you're going to see indictments, and then you're going to see convictions. And in the words of the fictitious Jack Valentine from the old Nicolas Cage movie, Lord of War, some of them are going to spend the next 10 years just going from their cell to the courtroom before they're ever tried and convicted, which they will be. They are scared to death